Welcome to Study Session 3, Cost Behavior. Introduction. This lecture covers various cost patterns in any given organization. It describes the behavior of costs like fixed cost, step cost, variable cost, semi-variable costs. It explains how cost varies with different activity levels such as volume of production in a period, number of items sold, value of items sold, number of invoices issued or received, and so on. Objective. This lecture is targeted towards identification of cost behavior and cost estimation methods, which include high-low methods, scatter graph, and statistical analysis. With this knowledge, it will be easier to separate fixed cost and variable cost from a mixed cost problems or situations. The knowledge would also enable you to identify behavioral patterns of cost for better decision making and planning processes. Fixed costs. These are costs that are not generally related to the volume of output or to the level of activity within a firm, although they do increase with time. Example is the salary of a managing director, the straight line depreciation of a machine, the rent of a factory building, and so on. Step costs. Many items of costs might be seen as fixed costs in nature within certain levels of activity only. For example, depreciation charge on machine may be fixed if production remains within the capacity of one machine. If more units are to be produced to satisfy increasing demand, another machine has to be purchased, and the depreciation on the second machine would make total depreciation charge to go up a step. Step costs are fixed costs that are subject to gradual changes in response to abnormally high productivity. Graphically, they form the pattern of a ladder. Examples of step costs are rent, where accommodation requirements increases as output levels get higher, and basic salaries, where more employees are employed on account of demand or increase in output. For example, assume you employ 100 employees with fixed salary of 100,000 per year. If you increase the number of employees to 150, the fixed amount of salaries will naturally increase. Variable cost. The variable cost tends to vary directly to the volume of output. As such, it is natural to expect that they have a linear or uniform relationship with output. Cost of raw materials, direct labor, and sales commission may behave in this way if the price per unit of materials or labor is constant. Semi-variable cost. A semi-variable cost is a mixed cost which consists of both a variable and a fixed cost. Thereby, they are partly affected by the volume of output. A typical example could be electricity, where a fixed fee is paid per month as well as a charge per unit of electricity consumed. Semi-variable costs could behave in either of the following two ways. Cost behavior of unit costs. The total fixed cost incurred by a business is constant with the level of output, whereas variable costs behave in a variable way, while the total cost, sum of all costs, behave as semi-variable costs. If we consider the fixed cost per unit produced or the variable cost per unit produced, the cost pattern will be as follows. As you could see, the variable cost per unit remains constant because it will always cost the same to produce one unit. Fixed costs per unit will gradually decrease with output because fixed costs remain constant regardless of output. Basic principle of cost behavior. An important part of cost and management accounting is the provision of information for managerial planning and control. In order to improve the required information, the cost accountant is not only concerned with recording what actual costs were, he or she has to be concerned also with issues like A. what costs are expected to be in the future for budgeting and planning purposes, and B, what costs should have been for comparison with actual costs or taking appropriate control action. In order to estimate what costs will be or what costs should have been a proper control for activities, the accountant must demonstrate clear understanding of cost behavior. Cost behavior refers to the way in which costs respond to decrease or increase in the activity level of an organization. Level of activity refers to the amount of work done or the number of events that have occurred. Depending on circumstances, the level of activity may refer to the volume of production in a period, number of items sold, value of items sold, number of invoices issued or received, number of units of electricity consumed, labor turnover, and so on. Level of activity is simply in relation to quantity of product or service and is normally presented as the independent variable on a graph. The basic principle of cost behavior is that as the level of activity rises, costs will usually rise. Naturally, it will cost more to produce 400 units of output than it will cost to produce 200 units. It will cost more to make 30 telephone calls than it will cost to make 20, and so on. The problem for the accountant to solve, however, is to determine for each item of cost: A, in what way do costs rise, and B, by how much as the level of activity increases. Cost estimation. It is often assumed that within the normal range of output, costs are variable, fixed, or semi-fixed. Step costs are fixed within a certain range. For this reason, cost accountants usually treat all costs as fixed or variable, and semi-fixed costs are segregated into either fixed or variable elements. There are several ways in which fixed costs elements and variable cost elements within semi-fixed costs may be established. Each way or method is only an estimate and will therefore give different results from other methods. Some of the estimation methods are account classification method, high-low method, scatter graph, and statistical regression analysis. General assumptions of cost estimations include the following. 1. Within the normal or relevant range of output, costs are often assumed to be either fixed, variable, or semi-variable. 2. Variable costs have a linear relationship with volume of output. 3. Fixed costs are constant. 4. Semi-variable costs have a curvilinear relationship. 5. When activity levels rise, variable costs per unit remain constant. The fixed cost per unit falls and the total cost per unit falls. Account classification method. This is a subjective method in which each item that make up the total cost are listed and accountants examine them one by one and decide whether it is a fixed or variable cost. The total of the fixed cost represents the fixed cost, FC. The total of the variable cost divided by the total units, X, represents the variable cost per unit. The cost equation is then written as the high-low method. This method of segregating costs into their fixed and variable elements is simple and crude, as it relies on two extreme points, the highest and the lowest level of activities. It may not be very representative of the data. It is to be used mathematically as follows. Step 1. Identify the highest and lowest output level. Step 2. Identify costs associated with highest and lowest output level. Step 3. Estimate variable cost per unit as VC divided by unit is equals to change in cost divided by change in output. Estimate total fixed cost. Or step 5. State the cost function as shown below. Step 6. Substitute in the cost function to determine total cost for any output level if required. Scatter graph. To use this method, you need to use the given information about costs and units to draw a scatter diagram with costs on the y-axis and units on the x-axis. To get accurate estimation, you need to choose an appropriate scale. Based on visual impression, you will draw the line of best fit. The intercept of the imposed straight line represents the fixed cost, while the slope of the line represents the variable cost per unit. Regression analysis method. The cost equation is represented by y is equal to a plus bx, where a stands for fixed cost, b stands for variable cost per unit, y is the total cost, x is the level of activities, for example units. You can estimate a and b by using the regression formulas below. Example: the total cost and output of XYZ Limited for 6 months, January to June 2011, as follows. 1. You are required to estimate the cost function using regression analysis method. 2. Use the high and low method to also estimate the cost function. 3. Estimate the cost function using accounting classification method, assuming that a detail of the total cost for the period. Solution 1. Because of the long digits that will result from the calculation, divide both the cost and the units by 100 and apply the formula. Solution 2. Step 1. Identify the highest and lowest output levels as 2,860 and 2,000 respectively. Step 2. Costs associated with highest and lowest output levels are 7,000 and 5,900 respectively. Step 3. Variable cost per unit is shown below. Step 4 is shown. Step 5 is shown. Solution 3 shown below. Summary. The knowledge of cost behavior is essential for the tasks of budgeting, decision making, and control accounting. Cost behavior is a way in which costs are affected by changes in the volume of output. Fixed costs are not generally related to the volume of output or the level of activity within a firm, although they do increase with time. Step costs are fixed in nature but only within certain activity levels, while variable costs tend to vary directly with the volume of output. Semi-variable cost is a mixed cost which consists of both a variable and a fixed cost. Cost estimation assumes that within the normal range of output, costs are variable, fixed or semi-fixed. Account classification method, high-low method, scatter graph, and statistical or regression analysis. We have come to the end of study session 3. Thanks for listening.